Today's lesson, we are going to look at how to prepare bank reconciliation. But basically, we are going to look at the second method of preparing bank reconciliation. It's always in my culture, to take students back before we can move forward. You must understand where we are coming from before you have an idea of where we are going. Now, when I say method 2, that means we also have method 1. In method 1, what you are expected to do is to prepare only the bank reconciliation statement without any adjustment of the cash book. What I mean by adjustment is that, the cash book, I said there are transactions that has gone through the cash book that didn't go through the bank statement. And there are transactions that has gone through the bank statement that didn't go through the cash book. So when we talk about adjustment of the cash book, we are trying to look at transaction that has gone through the bank statement that didn't go through the cash book. Such transaction, example, if these transactions are charges, bank charges, errors, interest, these are deductions, basically deductions made on the bank statement. These transactions has not been reflected in the cash book. So what we do during adjustment is that we subtract them from the cash book. And then there are additions, transactions or money that has been sent into the account that was not added to the cash book. Transactions like that will be what? Added. So when we are adjusting the cash book, we only subtract and then we add. But I want to make this very fundamental statement that when you want to adjust the cash book, let me make this fundamental statement. When you want to adjust the cash book, please note that number 1, unpresented check, and then uncredited check, uncredited check are not involved. So in this method 2 is basically what we are going to basically look at: adjusted cash book. So you adjust the cash book before you make the necessary preparation of the bank reconciliation statement. Now, whenever you want to adjust the cash book, let me give us a clue of how to adjust the cash book. Now look at this. Under this method 2, we said this method is centered on the following. Number 1, an adjusted cash book will be prepared. The adjusted balance will be used in preparing the bank reconciliation statement. And then any item that appears in the adjusted cash book will not be recorded in the bank reconciliation statement. Let me take an illustration. You have what we call adjusted cash book. This is just a sketch. Adjusted cash book. This is your credit side. This is your debit side. And let's not forget that our Naira sign, since we are using Nigerian currency. All right. So now, remember, I have established the fact that whenever you are preparing adjusted cash book, you should not include what? Let me write it here. You should not include what? Unpresented check and the what? Uncredited what? Check. These 2 transactions will be used to prepare the bank reconciliation statement. Now, the transactions that will likely come under adjusted cash book, they are transactions deducted from the bank statement that they did not deduct from the cash book, and transactions added to the bank statement that was not added to the cash book. Let's start with deductions. Deductions, normally, you know that cash book, whatever goes out of your hand, either cash or check, will be credited, and whatever enters your hand, either check or or cash will be what? Debited. So since we are starting with deductions made by the bank, everything that has gone out of the bank that did not go out of the cash book will be what? Credited. Number one, we call it bank charges. Let's assume our bank charges here. Let's assume it's 1,000. The next one is what we call bank interest. Bank interest, let's assume it's 500. The next one is what? Standing order. Let's assume it's 400. And then what we call direct debit. Let's assume it's 300. Now, these are possible transactions that could be taken from the bank without deducting them from the cash book. So when you have them lined up like this, you have them, these will be reflecting in the bank. In the question, they will tell you these transactions will reflect on the debit side of the bank statement. And then, because this transaction will be recorded on the debit side, it has to be credited on the cash book since you are adjusting. And then, here, at this side, we may have the balance. First of all, brought forward. This balance brought forward, let's assume it's 20,000. This is the balance of the cash book as at the beginning of the transaction. You know, accounting preparations or books of account are prepared on an accounting concept called going concern. We believe that the business will not die in the nearest future. It is something that is going to be alive forever. Nobody will open a business and be happy if the business folds up in no distance time, because you have invested your time, invested your money, invested everything within you. So you will always be happy as long as the business exists. So accountants are advised to prepare account based on that principle. So this balance brought forward is a balance of cash for last year. You just started business this year. The money you had in hand last year will be brought forward into this year. So when you open the adjusted cash book, if the balance is given to you in the question, you quickly bring it down. And then look at the question. Are there transactions added to the bank statement that was not added or that is not added to the cash book? Yes. Number one of them is what we call dividend. Let's assume dividend is 4,000. What is dividend? I've explained that dividend is simply interest on your investment in a company that is paid straight into your account. You decide to invest in a company ABC, and then at the end of the year, when they are apportioning or they are appropriating their profits, they want to pay their shareholders their returns. The money will not be brought to you in your house. The money will be sent to you in your account. Sometimes when this money is sent to your account, you may not get alert. Maybe later when the bank statement will come, that's when we will now say, okay, company ABC has actually sent in so amount as interest or returns. Such amount of money is what we call dividend. So because it has been added to your bank statement, you must add it back to your cash book. The next one is what we call credit transfer. Your uncle, your relations, company can also award you. They can send money into your account. Any money that is sent straight into your account is categorized as credit what? Transfer. You make transactions online. And then in the process you are supposed to be given an amount of money. That money is sent straight into your account. Once the money goes into your account, it will be added to your bank statement because it's automatic. If you have not received the alert, you may not know. So credit transfer is also added. Let's assume credit transfer is 1,500. And then the next one is what we call dishonored check. I will write DIS and then DISH, dishonored check. Dishonored check, 2,000. Let's assume it's 2,000. Now, whenever you want to, okay, whenever you have prepared an account like this and you want to close the account, don't forget this. This is how to close an account. These two lines signifies closure of an account. Now, having closed the account, when you want to balance an account, what you should do is you add up the credit side and then you add up the debit side. Now, let's do the addition together again. Now, by the time you add up the credit side, you add up the debit side, you compare. Now, let's add 1,000 plus 500, that's 1,500, plus 400, that's 1,900. 1,900 plus what? 300. Now, zeros plus 0, 0, 0. 3 plus 9 is what? 12. 2 carry 1. And then 1 plus 1 is what? 2. So the debit side of the account is 2,200. The credit side rather is what? 2,200. Now let's go to the debit side. We have 20,000 plus 4, that's 24,000, plus 1,500, 25,500, plus 2,000, that's 27,500. So the debit side is what? 27,000 what? 500. Now, having added the two sides and we have gotten these figures, you ask yourself, which one is higher? You can see that the debit side is higher than what? The credit side. So what you are going to do, you are going to take the highest number, or the highest side. This side that is 27,000 is the side that will enter your total column. Now the total column here is going to be 27,500. 27,500. I used to tell my students, please don't forget, in case you are doing a theory question that requires you to show all your workings, don't forget, this must be on the same line with this. The debit side must be on the same line with the credit side. Students are fond of writing this alternately. You don't write it alternately, or you don't write one to be adjacent to the other. You must write it on the same straight line. Some students will write this one up and they write this one down. Some will write this one up and write this one down. That's very wrong. You may get the figure, but the procedure is wrong. Now, having established that fact, now the question is, how do we now balance this account? We have taken the highest number here, which is 27,500. What you are going to do is subtract the lesser number from the higher number and then take the difference to the lesser side. What am I saying? The higher number there is 27,500. The lesser one is what? 2,200. If you subtract this, let's do the subtraction together. 27,500 minus 2,000 minus 2,200. This is 0, 0. 5 minus 2 is 3. 2 minus 7 is 5. And then you have 2. It will give you what? 25,300. So this 25,300 will now be taken to the lesser side of the account. Where is the lesser side? The credit side, because the debit side is higher. So your balance carried down is now going to be what? 25,300. And then you now have your balance brought down. You have your balance brought down will be what? 25,300. At this point, you have prepared what an accountant will call adjusted cash book. Now, having prepared your adjusted cash book like it is written there, that this method is centered on one, an adjusted cash book must be prepared. Having prepared this, if you go through it, you cannot see unpresented check or uncredited check. What you are going to do now is this balance will now be used to prepare your bank reconciliation statement. So you come down and then you now write your bank reconciliation statement. You write balance as per adjusted cash book. Okay, let me write it in full. Adjusted cash book. At this point, you don't even need double naira sign again. You write just one naira sign here. This, what balance are we going to? We are not going to use this balance. Let me emphasize this. Please, students are fond of making this mistake, and it will water down your effort, especially when you are doing theory question that the examiner will expect every workings. Please, you don't use the balance brought forward from the beginning again. This one has been displaced in the calculation. What you are going to use now is what? Balance carried down. This is the balance. This is what is called balance as per adjusted cash book. This is the adjusted cash book, and this is the balance. So your 25,300 is what you are going to use. So you write 25,300. So once you have you've gotten to this level, you are 80% close to the answer. The next thing to do is your unpresented check. At this point, you can now add your unpresented check. Unpresented check. Let's assume it's 5,000. 1, 2, 3. Add it. What you are going to get is what? 30,300. And then you less uncredited what? Check. Let's take it to be 8,000, or let's take it to be 10,000. Let's it be 10,000. 1, 2, 3. So if you subtract this from this, you have 20,000 what? 300. This is what we call your balance as per bank statement. So this 20,300 is your balance as per bank statement. This is what the examiner expects you to show him. You see the way it is. You have adjusted the cash book. You have prepared bank reconciliation statement. This is quite different from method 1. In method 1, there is no adjusted cash book. You don't adjust cash book. The only thing you do, you just prepare your bank reconciliation statement and then tie all these transactions together. But in method 2, you have to go through this. Now, I want to drop my recommendation. My recommendation at this point is that whenever you are asked to prepare bank reconciliation statement and you are not given the specification, the examiner didn't spell out whether to use method 1 or method 2, please use this particular method. This is the method that is in vogue. This is the method that is very, very clear to the profession now. The other method, you just tie everything together and then you won't be able to appreciate the transactions. You won't be able to differentiate unpresented check from uncredited check. But with this method, you can see now that you have already adjusted even the adjusted cash book alone will earn you back. Not to talk of when you now prepare bank reconciliation statement. So this is what you should know about the method 2. Now, very quickly, we want to go to our exam guide to solve 1 or 2 examples to further explain what we have said so far. Now, if you go to your exam guide, you will have options. You see the practice for WAEC, and then you see objective and theory. You click on your objective. When you click on your objective, you see variety of subjects there, and then since we are doing account, you click on account. It's already clicked, and then when it comes to we just choose random. Random is already choose. The reason is because it's going to streamline the questions that will relate to what we have done. If you choose a particular year, maybe that year may not have a question that will be related to what we are doing. So when you choose at random, the system will help you to choose the question that relate to what we are doing. And then you click on Get Started. When you click on Get Started, you have up to 21 questions to answer. Now, all these questions, they relate to what we are doing. All right, let's look at question 18. Let's look at question 18. All right. There's something very interesting I want to explain about question 18 before we solve it on the board. They say, use the following information to answer this question. You ask me, how do I get all this information I've been talking about? You see, it's not even stated. What you see there, you see Hassan, you see Mark, you see Rasak, you see Lukman. And then on the credit side, you see Dauda and you see Hussein. You see, these are human beings. These are customers that are transacting business with this company. And then on the bank statement, you see these names repeated. But there is something that you need to understand as a student. Now ask yourself, look at the debit side of the cash book. Are there transactions on the debit side of the cash book that you cannot see on the credit side of the bank statement? Yes, let's look at it together. If you check January 5, you see Hassan 3,080. Let's go to the bank statement. Check the credit side of the bank statement. Do we have Hassan there? Yes. When is Hassan? Is January 5. You see Hassan 3,000 and what? 80. Let's go again. You see Malik 24th January. Did you see Malik on the credit side of the bank statement? Is there. 24th January is there. Let's go again. Let's see Rasak 29. Do we have Rasak there? Rasak 1,240 is there. Let's go again. What of Lukman 31st? Check. Lukman is not there. That means we have something to do with Mr. Lukman as a customer. Now, this is the first thing to do. That Lukman transaction that is on the debit side of the cash book that is not reflecting on the credit side of the bank statement is what we call uncredited check. We have received, Lukman gave us a check worth 1,060 naira, but we didn't take it to the bank. You see now, we have debited it, we have added it to our cash book, but it's not reflecting in the bank statement. We have not taken the check to the bank, so that bank will add that money to our money. So you come you get a rough sheet. At the corner of your rough sheet, you just write uncredited check. Come here and write Lukman so you will not forget. How much is Lukman? Lukman there is what? 1060. Then you look again. We have exhausted the debit side of the cash book. Now let's go to the credit side of the cash book. Are there things on the credit side of the cash book that you cannot find on the debit side of the bank statement? Let's go. The first one, let's leave the balance brought down first. The first one is what? Dauda. Dauda is January 9. Let's go to the debit side. Is there Dauda there? Yes. How much is there? 1,400. What of Hussein? Let's check. Hussein is 31st January. Is there anything like Hussein on the debit side of the bank statement? No. So you quickly know that that is what we call unpresented check. We have given out. So the second one is what? Unpresented what? Check. And the person is what? Who what? Hussein. Double S-E-I-N. How much is that? 6,630. Now, what do I mean? This check has been issued out in favor of Hussein. We have given Hussein this check. Hussein, this is your check. We've given you. But Hussein has not had the time to take the check to the bank. The check is still with Hussein, probably in the office or with him at home. So, but the bank, they have sent us bank statement. When we've gone through the bank statement and we have seen that the check we issued to Hussein on the 31st of January has not reflected. So that is why we call it unpresented what? Check. Now, the next thing we are going to look at is, are there transactions on the debit side of the bank statement that is not on the credit side of the cash book? Yes, let's look at it together. Let's scan through. From the beginning, you see balance brought down. The second one is Hassan. Third one is Dauda. You know, just go through all those transactions. I am seeing January 30th. I'm seeing standing order. Can you see standing order of 770? Check the credit side of the cash book. Can you see it there? It's not there. So that is those charges, one of those charges. So you come here, you write standing order. This standing order is what? 770. The next one there is what? Bank charges. Bank charges is how much? Is 490. So these two transactions are there. Now another thing is, check the credit side of the bank statement. Are there transactions on the credit side of the bank statement that is not on the debit side of the cash book? Let's look at it together. Okay, so the last we have checked now is what? Bank charges. So we want to check again. Let's now look at the credit side of the bank statement and compare it with the debit side. Are there transactions there? I'm seeing 308. Check the debit side. You can see 308. 3080. I am seeing 1,200. I am seeing 1,200 on the debit side of the cash book. I'm seeing 1,240. 1,240. So every transaction on the credit side of the bank statement is represented on the debit side of the cash book. So we have succeeded in extracting the transactions we need. Let me point out something before we launch into the bank reconciliation. Can you see OD at the end of all the figures written in the bank statement? O/D. That OD represents overdraft. That OD represents overdraft. Overdraft is a special arrangement between the bank and customers. Because bank can allow customers to withdraw beyond the amount they have in their account, but it has to be a current account. So when the bank allow a customer to withdraw beyond the money they have in their account, it is called bank overdraft. So anytime you see a bank statement and then at the end of that figure you see OD, that OD depicts, or that OD represents overdraft. Although overdraft is a subtopic on its own under bank reconciliation statement. But for the sake of this lesson, I want you to understand that whenever you see an OD at the end of that transaction, at the end of the figure, know that it's a bank overdraft. Now, sometimes the cash book can also be overdrawn. You can spend more than you have received. In fact, that's one of the problem of our society. People don't spend within their income. People want to live above their income. So if you are a manager, you are an accountant, an economist that is managing it, and then you spend more than what you are receiving, your cash book will show you that red line. It is called overdrawn cash book. But in this question, you see the only overdraft we are having here is reflecting on the bank statement. So I won't explain that. The question we are asked here is a very straightforward question. What is it? They said the adjusted cash book balance is what? That's the question. Adjusted cash book balance is what? It's simple. Very simple. Now, what are we going to do? We are not going to use this one, I said it before, we are not going to use uncredited check. We are not going to use unpresented check because both of them are not needed in bank overdraft. The only thing we are going to use is what? Standing order and what? Bank charges. And then let's start with adjusted cash. What is the balance of the cash book? Let's go up. You see the balance of the cash book is what? From the question, the balance of the cash book is 2,540. Now, let me point out this. Normally, your debit side supposed to be greater than your credit side. But if you see now, you can see that your credit side of the cash book is greater than your debit side. So let's just adjust that and then we end the lesson on that note. So your adjusted cash book will look like this. Adjusted cash book. This is how it will look like. And then this is your credit side. This is your debit side. Now, your balance brought forward. You see, at this point, students must be flexible. When we were doing transactions that has nothing to do with overdraft, your balance brought forward has always been here. But in this case, it cannot be here. Why will it not be here? It will not be here because the cash book has been overdrawn. The bank statement has been overdrawn. So your balance brought down must show a credit balance. So your balance brought forward must be on the credit side because it's already on the, and that is what? 2,540. 2,540. 2,540. And because it is overdrawn here, these transactions that we are supposed to be added, are supposed to be subtracted from there is going to be what? Added. So you are going to add 1 to this. You are going to add it to this. And when you add it to this, so you have, let's go, you have your bank charges. You have your bank charges. How much is your bank charges? Bank charges is 490. You have standing order. You have 770. Let's do the addition together. 2540 and then 490 and then 770. This is 0. 4 plus 9 is 13. 13 plus 7 is 20. Carry 2. This is 5. 5 plus 4 is 9. 9 plus 7 is 16. Plus 2, 18. Carry 1. And then you add that one to here. You have 3. So you have 3,800. 3,800. 3,800. So your balance carried down is 3,800 and it's an overdrawn balance. So it's going to be, you write it 3,800 OD. And then I said you don't always forget this. So you have 3,800 OD. 3,800. So that is that. 3,800 OD is the balance of your adjusted cash book. Now let's look at the option. Do we have 3,800 there? Look at option A. You see 3,800. Option B, 3,310. Option C, down. So we don't want to waste time. The answer there is what? A, 3,800. So it's a very simple process. You see now, we've been able to achieve that. All these other transactions, we don't need them here. What you are asked there is adjusted cash balance. If you were now asked to prepare your bank reconciliation statement, you can now use this OD. And then when you use this, Instead of you to add unpresented check, you are going to add uncredited check to it and subtract this. If we do that, we are going to arrive at the balance of the cash book. Let's do that because it's a very interesting exercise. Let's see if we can use 3,800 to prepare our bank reconciliation statement, and we will arrive at 4,230 as the balance of the bank. Let's make progress. Now, I'm going to remove this so that we can have space to do our bank reconciliation statement. But don't forget that our adjusted cash book is what? 3,800 OD. So you write bank reconciliation. Reconciliation what? Statement. This one is not part of the question, but I just want to point out something. So you write balance as per adjusted what? Cash book. I said don't forget another sign. Is what? 3,800 OD. Normally, you are supposed to add unpresented check if it was a normal question, but in this case, it is an overdraft. So instead of you to add this, you are going to add uncredited check. So you add uncredited what? Check. How much is that? 1060. 1060. Let's do the addition somewhere else. 3,800 and then 10660. Add them 0684. So you have what? 4860. That's what you are going to have as that, and then you less unpresented check. Unpresented check in the question is what? 630. 630. Let's subtract 4806 and then 630. This is 0, this is 3, this is 2, this is 4. So you are going to have 4230 OD. 4230. Can you see the balance of the bank there? So this value now, this 4230 OD is what we call balance as per what? Bank statement. This is what you should have in your bank statement when you've reconciled. We have now reconciled the balance of the cash book, which is 3,800 with this. You can now see it in the question that you are 4,230. That is the last balance of the cash of the bank statement has been reconciled with the balance of the cash book. So that's how to go about bank reconciliation statement. That's everything you need to know about bank reconciliation statement. So far, we have defined bank reconciliation statement. We have established what a cash and a bank statement is. We've also explained reasons why the bank will not agree with the cash book. And we have looked at the two methods of preparing bank reconciliation statement. We have prepared adjusted cash book, and now we have looked at overdraft. So far, we have concluded bank reconciliation statement.